Let me start with what we've had out of China, because I know that that's been really significant through the Asia session. And you described it as the missing piece of the jigsaw puzzle when it comes to China, the fact that we got the word fiscal used by the Politburo today.
Yeah, so earlier this week, I thought we had a major turning point in Chinese markets, an extremely bullish moment, the most comprehensive cocktail of stimulus we've seen right across sectors, and specifically targeting the equities market, but also adding parts around housing and consumer and M&A, all sorts of sectors. But there's a lot of cynics out there, and many of them said, where's the fiscal side? Where's the fiscal side? Well, Politburo said they will provide the fiscal stimulus that's necessary. They also said they'll kind of enforce the kind of lending with the lower rates that are out there. They've talked about employment and worried about the jobs market for particularly college grads. Basically, we're getting the missing piece added into that stimulus. It was already extremely comprehensive, but now there's really nothing missing. OK, there's always going to be cynics out there. Even though the market's up about 10% in a week, there'll always be some people fighting from the losing side, and they're going to go, we don't have details of the stimulus yet. I think they're missing the point. In a state-directed economy, when every single arm of the economy, every single arm of policymakers from the highest level are giving a message loud and clear and coordinated, that is extremely powerful. They must win. They will make it win because they have said this is their objective. And I think that is the main message to take away right now.
Let's talk about risk-reward. How big is the potential reward here? How much upside could markets have? How much money can flow out of this big bond market rally that we've seen back into equities? What is the risk on the other side of that? How do those two sides balance out at the moment, or not balance out?
So the risks are, well, we've just done 10% or more. I mean, more like 15% of taking Hang Seng Tech in the space of a week. It seems like pretty extraordinary short term. So short term, yeah, we could pull back for a few days, especially we've got the holidays coming up. But I think that ultimately here, the upside is massive in terms of these are under-owned markets. If for the world's second largest economy, investors all around the world are underexposed to it. They are discounted. Now, China mainland stocks overall aren't particularly cheap, but Hong Kong stocks are still very cheap by their own historicals or by any other metric. So the Hong Kong version are very cheap. And in China, it depends on the sector. So there's some cheapness there. So it's a cheap discounted market, which the world is under-owned with massive stimulus tailwinds coming now. The reward's massive, risk is short term.
OK, so that's your view on China. Let's get your thoughts on tech and AI and Micron in particular. How much did that excite you, that news?
I think it's really important. As you know, that I've kind of talked about for most of this year, I was going to say the last few months, that we're in an extremely bullish macro environment, particularly the last few months. We've got OK growth, we've got monetary policy support, fiscal support, we've got cheap energy prices, we've got good earnings, everything's positive. What worries me is the micro side, because I don't study as enough. Obviously, when you think of micro, you think of the AI euphoria. Micron is saying that the micro side also won't disappear anytime soon. Bull market continues.